We said it would happen and now it's here. Rents are going mental. Check out the latest data from the ABS. Vacancy rates are well below 2%. In some markets, it's 0.3 or 4%. Now, just to give you context, a 2% vacancy rate basically means a property is empty for a week in the year. So the properties are all full everywhere. So this is where it gets really interesting, that CPI rents are posted at one rate, but the advertised rents are actually well above that. So when the government's looking at CPI, the Consumer Price Index, and they're judging inflation, they're judging it incorrectly. It's significantly higher. Up here, actual rents paid by new tenants increased by 14% over the year to February 2023, which is 9 percentage points higher than the monthly CPI indicator. So the government's or the RBA is making information or making judgment calls based on the wrong information. And in fact, things are worse than they expect. If you have a look here as well, since the onset of the pandemic in 2020, rents by new tenants have increased by 24%. That's a huge amount of rental increase. And the biggest rental increases have come from apartments. Just down here, rent inflation for apartments with new tenants was 24% over the year to February 2023, where the overall index was 14%. So what do you take out of this information? If you're a renter, it's going to be hard out there, but it is actually a good time for you to be looking at getting into the rental market, picking up an apartment, a townhouse, a house, whatever you can afford. The markets that are going to be most significantly impacted are the areas that get the most amount of migration, tourism, and students. So I would be looking at the major metros. I'd be looking at Sydney and Melbourne. Melbourne, you've heard me say it a lot, is one of the most well-priced markets in Australia, where you can buy a good piece of real estate for 650 grand. And you can anticipate there being strong rental growth. We've had some really good rental growth, which we told you more than 12 months ago, but we also predict that over the next 12 months, we're going to see more rental growth. And this is happening because we're just simply not seeing any supply. Here's a great graph by Chartered Keck. Here it is. This is new build supply against population growth. And as you can see up here, that by 2024-23, the apartment supply shortage is well below where it needs to be. Population growth is at about 95,000 people per annum, and we're just not meeting the supply requirement. Now, obviously, there's still a lot more time for people to put their DA and all that kind of stuff, but the market's not getting any easier. It's getting more expensive to build. So now's a good time to have a look, get into the market. Happy investing, happy house hunting. Catch you later.